everyone, it's Kate Hill from Adviseable Property Buyers. I'm here with Tina House from SmartMove, one of Australia's leading and most award-winning mortgage broking advisory firms. They specialise in residential and investment property lending, and I've come to ask Tina for an update on what's happening in the residential lending space at the moment. Tina, it's really, really nice to see you.
Lovely to see you, Kate, face to face, not on Zoom.
I know. So since we last met, obviously a lot has happened in the world. We have had pandemics, we've had lockdowns, we've had fairly momentous things happen. So during the past couple of months, I have had some clients who are on hold again because they're just concerned about what's going on, which is fair enough. I've had, and I guess like you, a bit of a mixture of people in terms of their motivation to do or not continue with property buying. So like I say, some people who've been concerned about moving ahead, I should say. Some people who are absolutely, Kate, let's just keep going, and also some new clients who've seized or seen that there is an opportunity here. But there are some people who are wondering whether they can in fact borrow any money at the moment. They're thinking it's going to be impossible, the banks aren't lending anyone any money.
Absolutely. Yes, that fear is there. Is it harder to get a loan? Absolutely. But at the same time, clients are getting loans every single day. There are certain industries, obviously, that the applications are getting scrutinised more. If you're in hospitality, tourism, real estate, pubs, any of those industries which have been hit the hardest, or obviously if you've been stood down and you're not in employment, then the lenders are asking, well, we need to make sure that we're doing the right thing and it's responsible lending and that the applicants can actually afford their loan. So that's probably key. Second to that, anyone that is heavily reliant upon commissions, bonuses, variable income, unless you're a healthcare worker or essential services. For those people, their borrowing capacity, I would say, has definitely been impacted.
Do you mean even more so since, because that's always been a little bit tricky, hasn't it?
Yeah, absolutely. If it's a variable source of income, generally a lender's going to shade it. They might look at 80% of it. At the moment, that might be 80% of the 80%.
Can you just explain to the lovely people what shading means?
Shading means it is, for example, you have a bonus of $50,000. The lender's not going to use the $50,000. They're going to shade it to allow a buffer in there and maybe take 80% of that at $40,000.
Gotcha.
So that $40,000 might now be $30,000.
Okay.
Hypothetically, depending upon the lender.
Okay.
So that's a big impactor. And look, there are some lenders that are okay with bonus income, particularly if you're in an industry that is not impacted at all. If you're in IT where you're selling a product whereby people, it's helping
you work for Zoom,
or help facilitate people work remotely, then you're more than likely been going gangbusters, and those employers are still paying bonuses. So there are banks that are prepared to make exceptions in those instances. It's not the general rule, but a good broker will be able to navigate your way through the myriad of lenders. More so than ever, it's less of a case of go to the bank, they tell us this is what we can borrow.
Absolutely.
There's a variance, and they all have their niches.
Yes. Yes, and I absolutely. I think if people take anything away from this conversation that hasn't finished yet, then it's that you go to a broker who has a good broker who has access, like you say, to a whole heap of lenders. You don't just go into your bank.
Absolutely.
That's it. And if they tell you no, you think, oh well, that's it, because it actually might not be.
And look, it's probably for those clients that are cautious about, but what if I lose my job? Or what's been the standout has actually been the reactions and the way that the banks have dealt with this. That very first week where for the clients that were stood down on the phone to me, the banks very much were, we will give you a deferral of your payments. We will change your loans from principal and interest over to interest only. We will halve your repayments. We'll either do that for 3 months or 6 months. And still giving you the ability to make the repayment if you have the funds. So that certainly provided a great sense of comfort, not only to my existing clients, but for those that are ready to take the plunge and buy that property, because no one knows what the future may hold. But knowing that if you do buy that property and then those sort of circumstances happen to you, knowing that the banks have this hardship measure, which they've always had, but at the moment it has, because of the sheer volume of requests, it's been far more streamlined and easier to access. So that's been a standout from the banks in my perspective.
Please subscribe to our YouTube channel so that you don't miss out on our area reports, the free webinars we conduct, and also of our further news updates. Leave us a comment below and let me know if you've got any questions or concerns about your property buying. Please check out our website for further details on our services and how our advisors and buyers agents can help you. And I will see you soon. Bye.